Good afternoon, everyone, and welcome to HP's fourth quarter 2025 earnings call. My name is Regina, and I'll be your moderator today. We have Enrique Lors, HP's President and Chief Executive Officer, and Karen Parkhill, HP's Chief Financial Officer, with us. Let's dive into HP's Q4 2025 performance and key highlights. Financial performance highlights for Q4 2025. Revenue growth. HP reported its sixth consecutive quarter of revenue growth, with a 4% increase year-over-year. This was primarily driven by strong performance in personal systems, across both commercial and consumer segments. Profitability. Non-GAAP earnings per share, EPS, came in above the midpoint of the company's guidance. Gross margin. While not explicitly stated as a single figure for the entire company, it was mentioned that key growth areas delivered gross margins above the core business. Personal systems. This segment saw a significant 8% year-over-year revenue increase, exceeding expectations. This was fueled by gains in high-value categories, like commercial and consumer premium products, as well as workstations. AI PCs constituted over 30% of shipments this quarter. Print. The print market remains soft, with revenue declining 4% year-over-year. This reflects market weakness and delayed purchasing decisions. However, HP maintained its number one market share in print, and supplies revenue performed in line with expectations with share gains. Key growth areas. Across HP, key growth areas achieved double-digit year-over-year revenue growth and contributed over a third of the company's total revenue for the full year. Full year 2025 performance. Revenue. HP returned to growth for the full year, with revenue increasing by 3%. Operating profit. Operating profits declined for the year, primarily due to trade-related costs that took time to absorb. However, HP demonstrated significant profit improvement from the first half to the second half of the year. Management's forecasts and future outlook. Fiscal year 2026 personal systems. HP expects the PC market to grow in the low single digits, driven by the Windows 11 refresh, AI PCs, and pricing strategies. They aim to outperform the market by focusing on premium devices, workstations, and increasing the attach rate of services. Revenue is anticipated to be stronger in the second half of the year. Print. HP projects to grow slightly faster than industry projections of a low single-digit market decline. This will be achieved by focusing on big tank printers, increasing marketing investments, introducing new products and solutions, and expanding their subscription offering globally. They also plan to grow share in the office segment with new products designed for SMB and enterprise customers. Workforce solutions. The focus is on growing recurring revenue by expanding software, security, and services businesses, and scaling their workforce experience platform in key verticals. Cost structure and AI transformation. Driving an improved cost structure remains a top priority. HP is launching a company-wide AI initiative aiming to embed AI across product development, customer service, and operational processes to achieve approximately $1 billion in gross run rate savings over 3 years. This initiative will involve workforce reductions of 4,000 to 6,000 people over the next few years. EPS guidance. FY 2026 non-GAAP diluted net EPS is expected to be between $2.90 and $3.20. GAAP diluted net EPS is projected to be between $2.47 and $2.77. Free cash flow guidance. FY 2026 HP expects to deliver between $2.8 billion and $3.0 billion in free cash flow. Significant risk factors. Memory cost increases. A significant headwind identified is the rising cost of memory, which is impacting PC costs. This is projected to affect personal systems margins in the second half of fiscal year 2026. Market softness in print. The print market continues to experience softness, with customers delaying hardware refresh decisions. Trade environment. The challenging trade environment and related costs have impacted profitability. Commodity inflation. Beyond memory, other component costs are being monitored, though the impact is currently less pronounced. Key strengths and opportunities. AI PC momentum. Demand for AI PCs is accelerating, with shipments already exceeding expectations and projected to increase significantly in the coming year. HP is actively developing AI-powered devices and solutions. Windows 11 refresh. The ongoing Windows 11 refresh is expected to remain a tailwind for the PC market into 2026, with a significant portion of the installed base still yet to upgrade. Recurring revenue streams. HP is focused on growing its base of contractual, recurring revenue from services, subscriptions, and as-a-service models, which offer higher margins and stability. Supply chain resilience. Investments have been made to make the supply chain more resilient, and strong relationships with key suppliers are expected to help mitigate future risks. Future-ready program success. The company surpassed its savings target from the multi-year Future-ready cost plan, delivering $2.2 billion in cumulative gross annualized savings. Most important statements from the CEO and CFO. Enrique Lors, CO. I am proud of the progress we have made across our priorities, especially as we have navigated a challenging external landscape. We have driven sequential profit improvement the last 2 quarters, demonstrating our ability to quickly respond to the challenging trade environment. We continue to execute our future of work strategy. We are accelerating innovation with AI-powered devices that harness AI at the edge and create better together experiences across our portfolio. The Windows 11 refresh will remain a tailwind for the PC market into 2026. And demand for AI PCs continues to accelerate, now representing more than 30% of our shipments this quarter. We have launched a company-wide program led by an executive reporting directly to me, and we have a line of sight to drive approximately $1 billion of gross run rate savings over 3 years across product development, customer service and support, and many of our operational processes. These will result in workforce reductions of 4,000 to 6,000 people over the next years. The memory headwinds that we have been talking about today, while material, are also temporary. And we're taking action, and we have managed, as we said also, such challenges before, and we have a lot of experience on how to handle that. Karen Parkhill, CFO, we are pleased with our results in Q4, delivering another quarter of solid performance to close out the fiscal year. Our teams executed well, driving better-than-expected top-line growth fueled by continued momentum in personal systems and in our key growth areas. We generated $1.6 billion in cash from operations and roughly $1.5 billion in free cash flow on the strength of the sequential growth in personal systems. Looking ahead, our guidance reflects the increasing inflationary pressures predicted for memory costs, which we expect at this point to have an impact as we move into the back half of our fiscal year. That said, we have a proven track record of managing challenges, and this one will be no different. We are excited to drive even greater growth and value in the future with revenue that is less cyclical and more stable and higher margins. It's really an important focus for us at the company. We are pleased to announce today that we are raising our quarterly dividend to 30 cents per share. This is the 10th consecutive annual increase since our separation in 2015 and reflects the confidence we and our board have in our long-term outlook ahead. Lowlights: print revenue decline. The continued softness in the print market led to a 4% decline in print revenue. Operating profit decline. Full year despite revenue growth, operating profits declined for the full year, partly due to trade-related costs. Memory cost headwind. The projected impact of rising memory costs on PC margins in the second half of fiscal year 2026 is a significant concern. In summary, HP delivered a solid Q4 and a return to revenue growth for the full fiscal year 2025, despite a challenging macro environment. The company is strategically positioned to capitalize on the AI PC trend and is implementing significant cost-saving measures driven by AI adoption. However, rising memory costs present a notable headwind for the upcoming fiscal year, which HP is actively working to mitigate through various pricing and strategic actions.